Hello students, now we will discuss another category of insurance which is equally important as life insurance. It's called as general insurance. General insurance, also known as non-life insurance, encompasses a wide range of insurance policies that offer coverage for various types of risk and losses. These policies provide financial protection to individuals, businesses, and organizations against specific events that can result in financial setbacks. Unlike life insurance, which focuses on providing benefits upon insured person's death, general insurance policies are designed to provide compensation for losses caused by event other than death. Policyholder pays premium to the insurance company, and in return, the company agrees to provide financial compensation in case of specified events leading to losses. The amount of compensation depends on extent of loss and terms outlined in the policy. It is important to note that general insurance is distinct from life insurance. Life insurance focuses on providing financial support to beneficiaries in event of the insured's death. General insurance, on the other hand, focuses on mitigating financial losses arising from events such as accidents, property damage, theft, and health related expenses. The types of general insurance are fire insurance, travel insurance, car insurance, health insurance, and property insurance, critical care insurance, and there are few others also. Fire insurance, like fire insurance, provides coverage for damages caused by fire to the property. Travel insurance offers coverage for various risks associated with traveling, such as trip cancellation, medical emergencies, loss of luggage, flight delays, etc. Car insurance, also known as automobile insurance, offers coverage for vehicle against range of risk, including accident, theft, vandalism, and damage caused to third parties. Health insurance provides coverage for medical expenses incurred due to illness, injuries, etc. etc. So there are various types of general insurance available in the market. Out of that, we are going to discuss two type of insurance. We are going to discuss health insurance and automobile insurance in detail because everybody of you is going to avail the health insurance policy and automobile insurance. Health insurance or medical insurance policy plays a crucial role in providing financial security and peace of mind in case of medical expenses. It covers a range of healthcare services from basic consultation to complex surgeries and can include benefits for hospitalization, daycare procedures, medical care at home, ambulance charges, and many more. This coverage is designed to relieve the financial stress associated with healthcare costs and enable individuals to prioritize their well being without worrying about financial implications. Now, why health insurance? Health insurance is very much essential for safeguarding our financial losses due to illness. So, there are various reasons for buying health insurance. Let's see these one by one. The first and foremost is protect your savings. Hospital bills and medical treatments can swiftly deplete your hard earned savings. By having health insurance, you can safely save your savings. It creates a safety net that shields your saving from being entirely consumed by unexpected medical expenses. This preservation of your saving is vital for pursuing long-term financial goals such as education of children, then to for buying home or retirement. The next is escalating healthcare cost. The escalating cost of healthcare services and medical treatments underline the critical importance of health insurance. Medical expenses are rising rapidly, often outpacing general inflation rate. In such scenario, having health insurance is must. Next is combating lifestyle diseases. Lifestyle diseases, including high heart element, diabetes, and hypertension, are increasingly prevalent even among individuals below 45 years of age. Healthcare insurance can help you in such situations. It is also important to know that additional costs associated with illness like medical checkups, doctor fees, tests, post-surgery care, and medicines are included in the policy cover. This shows that why it's valuable to understand healthcare expenses well and to have health insurance. Health insurance doesn't just pay hospital stays, but it also help with these extra expenses. Benefits of health insurance are shown on this slide. The first is cashless facility. One of the significant advantage of medical insurance is cashless facility. With this feature, policyholder can receive medical treatment at network hospital without the need to pay upfront. So you don't have to pay anything if you get admitted to hospital by some reason. You don't have to pay anything. The proposal will be sent to your insurance company, and your insurance company will pay the bill for you. So it is not required to have the cash when you are admitting to the hospital by any unfortunate reason. The insurance company settles the bill directly with the hospital, making the entire process hassle-free and minimizing financial strain during emergencies. The next is the treatment at any hospital in India. Most medical insurance plans provide flexibility to seek treatment at a wide network of hospitals across the country. This is particularly beneficial when you are away from your hometown or require specialized medical care that might not be available locally. The next is no claim bonus. The medical insurance plan offer no claim bonus as a reward for not making any claims during policy year. This bonus results in an increase in the sum insured or reduction in premium at the time of policy renewal. Incentivizing healthy living, and responsible use of insurance coverage. Next is fixed premium up to certain age. Many medical insurance companies provide the advantage of fixed premium until certain age. This means that your premium remains consistent even at any age, offering stability in your financial planning and ensuring that insurance remains affordable as you grow older. Because as you grow old, the chances of becoming ill or getting hospitalized are more. That's why generally insurance premium increases. Many insurance companies increase the insurance premium, but sometimes medical insurance offers a facility that despite of your age, your premium remains constant. The next is the tax benefit. Medical insurance premiums are eligible for tax benefits under Section 80D of Income Tax Act in India. Insurance premiums are tax free. So the amount is directly deducted from your gross income. So your tax decreases. This encourages individuals to invest in health insurance while also reducing their taxable income, thereby enhancing overall financial savings. So in summary, medical insurance offers a range of benefits that extend beyond just financial protection. Now let's see the type of health insurance. There are four types of health insurance available in India. The first is individual, the second is family floater, third is senior citizen, and fourth is critical illness. Let's see them one by one. Individual health insurance plan serves as a safety net for your medical expenses, particularly when you require hospitalization for a minimum of 24 hours. These plans can be either cashless with the insurance company directly paying the hospital bill, or reimbursement based where you are reimbursed for expenses incurred. Coverage typically includes range of expenses like room rent, doctor's fees, anesthetist fees, surgeon's fees, blood and oxygen cost, and operation theater charges. The next is important when you get married. This is called as family floater health insurance. The likelihood of every family member falling sick simultaneously or within the same year is minimal. These circumstances form the basis of family floater health plan designed to offer more efficient and versatile approach to health insurance. In a family floater health plan, the total sum insured is shared among all family members covered by the policy. Unlike individual health plan, where each person has separate sum insured, the family floater plan allows any or all family members to utilize the entire sum insured for medical expenses. This means that if family is insured for, let's say, 4 lakh through the family floater policy, any member of the family can avail coverage up to the entire amount in any given year. If there are 4 members in the family, each one can utilize 1 lakh each, or 2 can utilize 2 lakhs each, and so on. The policy provides flexibility to allocate coverage according to the family's need and medical requirements. The next is senior citizen health insurance. This is specially tailored to meet needs of elderly individuals. These policies have higher premium due to the increased possibility of hospitalization among senior citizens. The next is critical care insurance. A critical plan serves as a protective measure against financial impact of major illness like cancer, kidney failure, heart attack, etc. In the face of critical illness diagnosis, the policyholder receives a guaranteed sum from insurance company. In summary, critical illness plans offer a layer of financial security by providing guaranteed cash if the policyholder is diagnosed with critical illness. This coverage is invaluable during times of medical emergency, ensuring that individuals and their families have means to manage financial aspects of recovery. When purchasing health insurance, consider the following guide to make informed decision. The first is analyze your requirements. Begin by assessing your specific needs. Determine if you require coverage for pre-existing illnesses, maternity benefits, or other specific conditions. Understanding your priorities will help you choose a plan that align with your needs. Next is coverage amount. Calculate the coverage amount required. Get a general guideline. Aim for coverage that is at least 6 times your monthly salary. For instance, if you earn 1 lakh per month, consider health insurance coverage of 6 lakhs. This ensures sufficient financial support in case of medical emergencies. Next is understand coverage detail. Thoroughly understand the coverage offered by the health insurance plan. Look for following components. The first is daycare treatment. Check if the plan covers expenses related to the daycare procedures like cataract and treatments that doesn't require overnight hospitalization. The next is post-hospitalization care. Assess the coverage for post-hospitalization expenses, including follow-up appointments, medication, nurses at home, and other related costs. So these factors you should remember while buying health insurance. The next is waiting period. Waiting period refers to a specific duration during which you are not eligible to make any claims under your policy. There are 3 types of waiting periods that you should aware of. The first is initial waiting period. It is the first waiting period that you encounter after purchasing the health insurance policy. Within a month, 1 month, you cannot make any claim. You can make a claim after 1 month only. Of course, accident is exclusion for this. You can make a claim in case of accident from very next day of buying insurance policy. The next is 1 year waiting period. Some health insurance policies impose waiting period of 1 year for certain specific illnesses or procedures. This means that for the initial year after policy commencement, coverage for specific medical conditions such as cataract surgery might not be available. You have to wait at least 1 or 2 years for that. The next is 3 to 4 year waiting period. Pre-existing conditions, because many policies do not cover the pre-existing diseases. How they define the pre-existing diseases? Pre-existing conditions are ailments or health issues that you already have when purchasing the policy. Like some might be facing the health element or the health issue like high BP or diabetes. So all illnesses related to the diabetes and hypertension, okay, high blood pressure are excluded from the policy. During this waiting period, coverage for medical expense related to these pre-existing conditions is not accessible. Next is exclusion in health insurance policy remain or pertain to specific medical procedures or illnesses. Those are not covered under policy's term. These are instances where the insurance company will not provide financial assistance or coverage for associated expenses. Common examples of exclusions might include dental treatment, cosmetic surgeries treatment, or certain lifestyle conditions. So many insurance company or almost all insurance company doesn't cover dental treatments and cosmetic surgeries in normal insurance policy. You have to buy a special insurance policy for dental cover. One of the important consideration is cashless facility. Large number of hospitals should be connected with cashless facility of the insurance provider. So you don't have to pay money while getting admitted in the hospital due to some reason. So here are some factors to keep in mind while purchasing the health insurance. So please remember the factors shown on this slide. Another type of general insurance that everybody of you will need is a car insurance. It's also called as motor vehicle insurance. Motor insurance, also known as vehicle insurance, is a legally required policy intended to have in place or put in place for various reasons. This policy is offered for all type of vehicles, including four-wheelers, truck, two-wheelers, and other vehicles driven on Indian roads. This insurance serves to provide financial protection and legal compliance for vehicle owners. Motor insurance is obligatory by law for all vehicles in India. It is a legal necessity to ensure that every vehicle on the road is covered with insurance. A significant aspect of motor insurance is its coverage against third-party liabilities. If your vehicle causes damage or harm to another person's property or health, the insurance policy covers the financial loss suffered by the affected party. This ensures that you are financially shielded from potential legal liabilities and compensations. Motor insurance also safeguards the insured vehicle against accidental damages. In case your vehicle is involved in an accident, the policy covers the repair or replacement cost depending on terms and conditions of the policy. There are two types of vehicle insurance: third party liability insurance and comprehensive insurance. Third party liability insurance is mandatory insurance policy designed to provide coverage for situations where your vehicle causes harm or damage to the third party, such as another person, vehicle, or property. So, third party liability insurance is obligatory under the law. It means, or it is used to ensure that if your vehicle is involved in an accident that causes injury or damage to another person or their property, and their financial coverage available to compensate the affected party. So you don't have to pay to the affected party. Your insurance company will pay to the affected party. The next is comprehensive insurance policy. Comprehensive insurance policy is an extension of the third party insurance policy, providing additional coverage for your own vehicle. The comprehensive insurance policy not only covers third party liabilities but also safeguards the insured vehicle from damage, theft, and other risk. This policy protects you as vehicle owner from financial losses incurred due to damage or theft of your insured vehicle, whether it's a repair cost after an accident or expense related to the vehicle theft. So if your vehicle gets stolen, insurance company will provide you the sum assured. This coverage offers valuable financial security. Due to its wider coverage, comprehensive insurance policy carries higher premium compared to the basic third-party insurance plan. So here are the motives for getting vehicle insured. The first is legal requirement. Vehicle insurance is obligatory as per law. You cannot escape from it. Other insurance are not compulsory by the law. The accident occur while driving, and vehicle repair expenses can be substantial. If engine get damaged, your vehicle expenses would be in lakhs. Then additional benefits, certain policies cover towing and key loss. For modern vehicles, key alone can cost about 5,000 rupees. Next is cashless repairs. Insurance provides other cashless repairs or insurance providers offer cashless repairs at network garage. Like for health insurance, there are network hospitals. For motor vehicle insurance, there are network garages. So there you can avail the repair facility, cashless repair facility to be precise. Now there are some add-ons offered on vehicle insurance, like there are riders on life insurance, there are add-ons on vehicle insurance. You should consider these add-ons while buying insurance policy. The first is zero depreciation and second is engine protection. Now what do you mean by zero depreciation? As your car and its parts naturally age, their value decreases due to wear and tear. A zero depreciation cover is an enhancement to a comprehensive car insurance policy that provides valuable advantage. With this cover, you can claim the entire expenses of replacing car parts in the event of accident. Let's see how it works. Imagine your car requires a new bumper after 3 years due to some kind of accident. Without a zero depreciation cover, the insurance company would compensate for the depreciated cost. Considering the bumper value has dropped by about 50% in 3 years, insurance company will give you the compensation which is equal to 50% of the part cost, because the part which has got damage has 50% value. Although the garage installed the new bumper, you had a charge for it, the insurance company would only provide depreciated amount, that is 50% amount. However, if you opt for zero depreciation cover, the insurance company would reimburse you for the full cost of new bumper without accounting for depreciation. This option is available up to 5 years from the car purchase date, enhancing your coverage during the initial ownership period. Beyond 5 years, it's not available. Next is engine protection cover. This coverage is designed to safeguard your vehicle's engine against damage caused by specific situations such as waterlogging. This coverage is especially relevant in scenarios where water enters the engine, leading to the potential damage. Such situation can be costly for repairing and making the car like new again. If you are driving your car in the cities like Mumbai, where the waterlogging problem happens in monsoon, opting this coverage is very much essential. The next is where to buy vehicle insurance. When you buy a new car or insurance about to included or insurance included in the on-road cost of your vehicle, so you have a little choice about buying an insurance. From second year onwards, you can buy insurance either from service station, OEMs, or directly from insurance companies. Insurance policies offered by service stations or OEMs, like if you buy a Maruti car, Maruti company will provide you the insurance. These type of policies tend to be more expensive than regular policies. This is due to various factors, including additional administrative charges and the convenience of getting insurance at the point of vehicle purchase. So these policies are really very costly. After first year of vehicle insurance, it is advisable to directly contact insurance companies for quote. These quotes are likely to be more competitive compared to policy offered by service stations or vehicle manufacturer, that is OEM. It is smart move to explore your options and potentially to save on insurance cost. If you are insured, the service station will provide with you with necessary service as their revenue comes from repair. So many times OEM claim that if you buy insurance policy from company directly, you might not be get a cashless facility and service station might not repair your vehicle. So, but remember, the revenue of service stations come from the repair, so they tend to increase repair cost, or they will willingly repair your car because you are going to pay for it or your insurance company is going to pay for it. They cannot deny the repair. So remember, always buy car insurance policy directly from the company. Now let's talk about something called as insurance repository. Insurance repository is a special place to keep all your important documents safe and organized. It is like a virtual storage space where you can store your insurance policies in an electronic format instead of having paper copies. It's like a digital home for your insurance policies. Instead of having physical paper documents, you can keep your policies safely stored in the digital space. If you have a paper insurance policies, the insurance repository can help convert them into electronic policies. You can see all your insurance policy is in one place. It is easy and free to open repository account. You don't have to pay the maintenance charges also. If you don't have insurance repository account, immediately open an account. It is also called as e-insurance account. You can do it online anytime you want. It's like creating your own special digital library for insurance document. Now, if you are not satisfied with the insurance company's services, then how to lodge a complaint? Let's discuss. Every insurance company is obliged to offer contact details that can use if you have questions, problems, or complaints. This information is usually present in the policy documents and can also be found on the company's official website. It's like having a direct line of communication to reach out to them. Insurance companies often provide an escalation matrix where you can escalate your complaint. When there is a disagreement between you and the insurance company, that's where the insurance ombudsman comes into play. This is a special body established by Government of India to handle insurance related complaints. If your complaint doesn't or is not been resolved to your satisfaction through the company channel, you can approach the insurance ombudsman for further assistance. The insurance ombudsman is not just any organization, it's a statutory body, remember. It is backed by Government of India and it means it has a official authority to intervene and make decision to resolve complaints regarding insurance services. It acts as a fair and impartial authority to ensure that your concerns are heard and addressed. Now, here are some points that you should remember while buying insurance. It is often written that insurance is a matter of solicitation on every insurance advertisement or policy documents. What is the meaning of it? Technically, it means insurance is purchased, not sold. So it's your responsibility to understand the product before you pay for it. In nutshell, remember that insurance is something you choose to acquire, not something that is forced upon you. To make informed decisions, take the time to understand insurance product thoroughly, deal with licensed agent, make payments directly to the insurance company, and provide accurate and truthful information during application process. So you have to provide accurate and truthful information because the base of insurance is faith. By adhering this principle, you ensure that your insurance experience is based on trust, transparency, and accurate representation. So, if you don't provide a truthful information, your claim might be denied by the insurance company when required. Here are some more points to remember. Remember that insurance is about protection, not investment. Don't buy it solely for tax benefits. Treating insurance as an investment can be costly and less effective than dedicated investment options. Before purchasing any policy, understand the claim and complaint procedures. Knowing how to file claims and raise concern ensures a smooth experience when needed. Life changes, so update your beneficiary or nominee details in your policy. So if you remember these points, experience of buying insurance will be very good for you. So thank you for your attention. See you in the next lecture. Thank you.